Hi everyone, welcome back to Be Rich. It's me Vinod here. I hope you had a wonderful weekend and your Pongal celebrations were great and you're back at it and that you managed to enjoy day 14 by looking at some tiffin coffee range. As I was recording the video, today the market has been all over the place and as of now the biggest one which has moved in the market, my list at least, is Indian hotels. Not that I'm considering Indian hotels, it's too far expensive, but Indian hotels on my watch list is the one which is corrected the most, almost by 4.5%. Trent is still down from Tata's. I have these on my watch list because if they ever correct massively, I can consider them. But Trent is not even near consideration range and they're down almost 2%. TCS is down 1% and ITC, which is in consideration, is down 1%. Manappuram is down 0.5%, which is still a good price if you're looking at it. Dr. Reddy is down 0.5%. Tata Chemicals is down 0.5%, which is very expensive. So is Tata Investment Corporation, very expensive. Infi is down 0.5%. It was down much more in the morning, but now it's timely. It seems to be the market has pulled it back up. But that is still very expensive. Tata Motors is in consideration. They were down quite a bit in the morning. They were at 768, but now they're 777. And it's still a fabulous price if you're looking at Tata. Other ones which I bought in the morning, Indusin, are up actually by now. And Natco Pharma, which was slightly down, is up almost 1.5%. South Indian Bank is up. So most of these companies which we're usually looking at in our list, some of them are up, some of them are down. I do hope that you looked at Tiffin Coffee range and you invested something, not but too much. Like I said in our 52-week morning journal entry, that we tend to get swayed and imagine there are these special moments in the market, like Trump being sworn in or some geopolitical tension, and there's going to be some eruption in the market, and then we will tell ourselves some stories, some false narratives, then we convince ourselves and we go drop unnecessary money in the market when we shouldn't be doing that, and try to stay cool and calm and stay within our limits and our goals and to keep chugging away at a slow pace and not to get swayed and tell ourselves stories, and that is important. Case in point, if you take Kalyan Jewellers. A lot of you have been feeling nervous about Kalyan Jewellers. The reason why you're feeling nervous is my brother said in a video that Kalyan Jewellers, if you want to sell, you sell. So let me lay it out to you about what's happening in Kalyan Jewellers. Then you can understand. Right? Kalyan Jewellers, Warren Pincus and Kalyan Jewellers together were holding most of the shares in that company. And then when Warren Pincus exited, the owners of Kalyan Jewellers bought most of the stock back from them. So now currently most of the stock is owned by DIIs, FIIs and the promoters. What is in hand with retailers is only 7% of the stock. So if you look at it like that, we have very little scope of actually checking the price of the company. If anything, the price movement is happening, it is happening between the owners and the DIIs. They are booking and selling and they are exchanging shares in hand, which is what is leading to the fluctuation in the price. The FIIs are not doing anything much in terms of buying. So it is all within DIIs and the promoters. And that's where the story got a little murky as far as the news was concerned, saying he is doing some exorbitant spending and all other things which is not really related. But then what was a major concern was, the allegation was that he is working in cahoots with mutual fund houses such as Motilal Oswal and doing deals underneath the table, and there is something shady there. Kalyan Jewellers came out on a special call saying they're not doing any of that. Then Motilal Oswal came out saying they're not also doing anything and they're not taking any special money. So that led to price correction in the market, is what everyone feels. But if you really look at it, the price correction was not by retailers, it was purely by the DIIs who are buying into this. And if you notice, what even Motilal said was the reason for them selling Kalyan Jewellers at this point in time was because they're booking profit and no other reason. Now coming back to what my brother was saying. My brother was saying if you had entered Kalyan Jewellers, like a lot of you did when he was initially calling it way back, at 100 rupees, 120, 130 rupees, you would be seeing substantial profit. And if you are feeling nervous seeing the price correction in Kalyan Jewellers, because you had in your mind, you imagined that you made so much of money and now you're losing that money, though you haven't, because your initial investment was only this much. And that has ballooned and now it's corrected again. And you're feeling this imagination that you're losing money. Then you're feeling nervous, you may book the profits and exit. But fundamentally, nothing is wrong with the company and there's nothing to worry about in terms of the company or the governance of the company. So it is not in the case of Cupid, where things have changed. Nothing has changed and you can continue holding Kalyan Jewellers if you want. There's But if you are feeling, oh my God, the pain is too much, I had so much money there, now it's all gone away, and you're feeling that kind of point, maybe it will correct some more, I do not know. So if that's the case, then do sell it. This is what Anand is saying. The other thing what my brother was saying about Kalyan Jewellers was, he was talking about the roadmap for Kalyan Jewellers as a business going forward. In the current scenario, they're doing very well. But 10 years going forward is going to be much harder for them because the Titan, which is owned by Tata, is going to give them a run for their money, right? And the Birlas are entering the same segment and they're going to give a run for their money. And the valuations of Kalyan are such that the Tatas will not be interested in buying them, nor the Birlas will be interested in buying them. And they'll be getting in a very crowded space, Kalyan. And it's going to become harder and harder for them to sustain this kind of business, is what my brother feels. At that case in point, 10 years from now, they may not be there to do what they're doing today. So if you're looking at holding the stock for a very long time, you may have to take this into consideration, is what my brother was saying. Of course, my brother ran through the information very fast. Some of you missed it. So that's why I took the time to explain it and break it down into pieces so you can digest it slowly, in bits, so you understand. So what's the key takeaway? Nothing is fundamentally wrong with Kalyan. Kalyan is a good company, safe. If you're in a position of great profit, you can continue holding it. If you feel nervous after seeing such a huge correction and you feel maybe you want to book your profit because you need the money sooner than later, maybe you can exit it, or you're feeling nervous. For that reason alone, you can exit, not because the business is anything wrong with the business. And 3, the long-term play for Kalyan Jewellers may get very crowded and very tight. We'll have to keep an eye on it to see how they plan to pivot and manage the competition which is there in the market. It's not that they can't manage, but the competition is going to be stiff. Talking about competition, we've seen a huge correction in Zomato and Swiggy. Those two companies have seen almost a 23% correction from their all-time high. And a lot of you are wondering, is it something you should be into considering? My problem is, in the terms of Swiggy and Zomato, you've seen a 23% correction, and a lot of you are wondering if you should be getting into Swiggy and Zomato right now, if you should take that into consideration. My advice would be no. It's still too expensive and too early to do that, because what is happening, like I said in the previous video, which Rupesh was kind enough to share with us, was that Amazon's entering, Reliance is entering, Tatas are entering, and DMart is also pivoting into this, and there's going to be a lot of stiff competition for Zomato and Swiggy. Yes, they are expanding rapidly, so in terms of their earnings, is going to be affected and hammered because of all the expansions they're doing. 2, they also have to give a lot more freebies, Zomato and Swiggy, to retain their customers. And 3, they're going to face competition. So in terms of all that, all their earnings are going to take solid hammering coming year or 2. So we'll have to wait and watch. And all that is going to fuel further speculation with the traders and with FIIs, and they'll probably dump them even more. So if you are keen on Zomato and Swiggy and you want to support this kind of an economy and you're a strong believer in this, then wait. This would be my advice, and not to jump at it right away. So that said, the last thing which I want to talk about is something coming to personal finance. One of you had reached out to me on Instagram, and she had asked me that she has taken a gold loan for 3.5 lakhs and she has pledged her gold against this loan. It's a gold loan, and she wants to know if she should sell the gold and close the loan, or somehow pay the loan amount and the interest and retrieve her gold. My advice would be to do that. Somehow manage to pay the loan and retrieve the gold. The reason why I'm saying it is, that is physical gold what you have already bought. That means you've already paid making charges for it. You've already paid taxes for it. Today the making charges is 18% and 3%. That's like 21%, which you have to pay more. And gold is the way it's compounding, is going at 10% per year. So today is 7,500. By the time you come next year or so, or even let's say 2-3 years from now, you'll be looking at paying it almost 12,500. I can't imagine you selling off this physical gold today and then thinking about buying it, even the same amount of gold, at a much higher cost a couple of years from now. That will be very difficult. So you've already done the hard work of buying the gold, and you've already paid all the dues for that gold. My advice would be, somehow pay this gold loan off and retrieve the gold. I can understand why you took the gold loan. Maybe you're in a situation where you couldn't do anything and you had to take that gold loan, but now you have to pay the price for that and pay it off. Do not sell that gold, and do not close the gold loan by any other means other than paying the loan off. Gold loan is a wonderful way. The way it's set up is, you can pay chunks of it whenever you have cash on your table. So whenever you have cash on your table, forego some gratification, which could be a holiday, which could be some new clothes, and put it away towards the gold loan and pay it off. Before you know it, you would have paid off that 3.5 lakhs, though it may look enormous right now from where you're sitting. I know it's difficult, but you can pay it off if you put your mind behind it and becomes your sole thing which you want to get done. And if you look at the gold which is there, which is locked up in that loan, as something very precious to you. If you have that attitude, you will definitely retrieve that gold. And trust me, that gold is far more valuable than 3.5 lakhs. The way the gold price is being looked at, the way it's going to go in the coming few years, you will really feel terrible when few years goes by and you realize that gold which you decided to close the loan off, right, has become 2 times, 3 times its value, and you'll feel very bad about it. Trust me, I've been there. So that's why I'm giving you this advice. Don't sell that gold. Somehow figure out how to pay this loan off and close it. If my brother was here, he would say the same thing. Unfortunately, I don't have him next to me to say this, to echo the same thought. But on Saturday, Sunday, since you value his opinion too, I will definitely try and remember to ask him this in my Tamil video and ask him to answer this again. And I'm sure he'll reflect what I'm saying to you. Other than that, tomorrow is another day. It's day 15 in the market for us. So when the markets open, do look at different coffee ranges. The companies which I would advise you to keep an eye on, I would consider, as we famously say in this channel now, I will ask you to consider South Indian Bank, IDFC. I would ask you to consider Tata Motors, NATCO, Dr. Reddy, and I would also ask you to consider Karnataka Bank if you want. These are what I would say. Basically, in FMCG, ITC is there for you to consider too. These are the main stocks which I would advise you to look at. Other than that, some of you who are talking to me on Instagram, what have you been looking at? Most of you on Instagram who I'm looking at have been looking at NATCO, ITC, IDFC. One of you has bought Hero MotoCorp. It is in value, but it is expensive in terms of amount of money, in terms of budget. So keep that in mind. But most of you bought Tata Motors, NATCO, Dr. Reddy. Some of you bought Pharma Bees. Some of you were wondering about ITBs. ITBs, like I said in another video to someone else, or I think I was chatting with someone who was planning to focus only on ITBs for the next 4 years as a play. I said not to do that. I said you can invest in IT, but I would also ask you to diversify it and put some in pharma and definitely put some in gold. Spread your bets, just not to focus purely on ITBs, because having all your eggs in one basket is not a good idea. On top of it, the IT industries we have to keep a close eye on, considering what is happening with Trump, with H1B, with the tariffs, and with actually the orders and the cycle, what is happening in the industry. All that said, there are a lot of things that can weigh the industry down. So we have to watch and wait and buy as far as IT stocks are concerned and IT industry is concerned. And most of the companies right now are overvalued, especially when some of you are asking about Wipro. And one interesting question one of you guys asked me is, we have a lump sum. Is it best to park in gold Bs right now? Yes. If you're looking at something for 2 to 3 years, leave it in gold. If you're looking at something from 2 to 5 years, put it in bonds and take that interest and invest it in stocks. If you're looking at 5 years or 10 years plus, then I would say put it in bonds and take that interest and buy a passive Nifty 50 fund right now. That's what my advice would be to you. Anyway, I hope you found this video informative and interesting and gave you some ideas on what to do tomorrow on day 15. Do join me on the 52-week group. We have some interesting conversations, and especially during the weekends when all of us have a little more time. I do enjoy having those conversations with you there. Nothing else more to say. Stay safe, take care. See you again tomorrow.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.